Hi, everyone. It's Janet. I'm here tonight. Just wanted to get on and just talk about our mortgages and our mortgage industry and just get out there and give you guys some more information about what's going on in the world today with everything going on. And I have asked my friend Jynel Torres from Waterstone Mortgage to join me and to talk about it. Hi, Jynel.
Hi.
Hi, thank you for joining me to talk about this and to see. So the first thing everybody's been asking me is saying, what's going on with mortgages? Is it harder to get a mortgage? What's going on in the world of lending right now?
Absolutely. Well, thanks for inviting me. I really appreciate it. So I'm glad you're asking because a lot has changed with COVID-19. It's not impossible to get into a mortgage, but things definitely have gotten a little bit more strict. It also depends on what lending institute you're using and how strict they have tightened up their regulations for underwriting. So at Waterstone Mortgage, we've been pretty even. We've been pretty flat throughout this whole process. Our underwriting rules did get a tad strict, but we are hearing that, there's a lot more going on with other institutes. So you really want to work with your lender on what's going on within their company. Currently at Waterstone, our underwriting guidelines for Fannie, Freddie, VA, FHA, they went up to 640 credit FICO score that they require for underwriting. A lot of other institutes we're hearing are going up to a 680 and even up to a 700. So it's important to follow up on those past clients who you thought may have been pre-qualified that are barely making it through credit requirements. So I would definitely follow up on those if you guys are concerned about anything pending. Let's see. Definitely, FICO scores have gotten a lot more strict, but there's also your debt to income ratios that have gotten more strict. So,
really?
Yeah, debt to income ratios were a lot more lenient at the beginning of the year. So, you had like a back end ratio of 50% with conventional and a back end ratio with FHA at a 56%. That has gotten a lot more strict, and we're looking more around a 45%. Again, it doesn't make it impossible for a buyer to get into a mortgage. It just might lower their purchasing power. So with your lender, they just might not qualify for as much if the debt to income ratio is something that we're worried about. There's credit. You want to work with somebody who can coach the client, on what to do to get where they need to be if the FICO score is below a 640. Okay. Yeah. So another way I've been going around it is through MFA. All their rules and regulations have stayed the same. So they still have a minimum requirement of a 620 credit score, and their DTI ratios are still lenient. So I've been putting people in that box a lot more to use first-time home buyer, even if they don't take out that second for the distance.
Mm-hmm. We are live, and I have a question from Lance Eaton. Thanks for joining us and asking us a question there, Lance. He's wanting to know right now, what are your current interest rates for a 30-year?
Oh my goodness, Lance. They change every day with the market. So they're pretty well right now, but they still are great. Rates are really good. People that's their number one question. They heard originally that the Federal Reserve had lowered their rate down to 0%. So there was a lot of misinformation out there in the public. People were calling me thinking they can get a nearly 0% interest rate.
Oh, yeah. No.
Yeah, that's not how it works. But our rate's slightly lower. We weren't crucially impacted by that. The only people that you would see be directly affected by that would be people who are in the car business, who are in those like quick loans, smaller loans. personal loans with the credit union. So our rates were low. They took a dive at the beginning of everything going on with COVID-19, spiked up for a minute, and then they went back down.
Do you have like a range of the rates are right now? Because I know it depends also on your credit score and a lot of other factors, but do you have like a range kind of what they're at like today?
Oh yeah. So I pulled a 2.7 for an FHA with somebody who had an 800 credit score. So I mean, you could get pretty low with a good credit score. Conventionally, you're seeing a little bit higher. I'm seeing more of like 3.2 to 3.5. So that's about the average right now.
Okay. Awesome. I just want to acknowledge the people that dropped in and say hi. This is my mom, my biggest fan. It's probably my son also downstairs. Hi, guys. And then one of my past clients. You're so great, Mel. Thank you. Thank you. Thank you. Okay, sorry. I want a little side note there for a second. So is there anything that has changed? We know that FICO scores have to be a little higher. What about people that are, let's say, self-employed right now, small businesses? How is that affecting them to try to get a home loan?
It's huge right now. So right now, if you're not bringing in a steady stream of income, whether you're self-employed or not, if your income just stopped, then it's harder to get into a loan right now. We do have to prove income all the way up to closing. That's also gotten a lot more strict. So before we could do like a verbal verification of employment, collect a few stubs. As long as we got a clear to close, we were good to go. But now they're requiring a lot more maintenance on that, because we have to make sure that people are still employed, still have jobs, still getting a steady stream of income. If they were deemed non-essential, that was also a red flag for underwriting. So we would dig a little bit deeper into what's going on with the situation. If they had to shut their company down and could not prove that they were still getting a steady stream of income, then we could not proceed forward with the loan until basically this whole COVID thing is over.
Okay.
But yeah, so if you can prove that you're still working, you're still getting paid, we can still do the loan.
Okay. Good. And what about, I know that we were talking about with COVID and everything going on, but what about like for first-time buyers? I know a lot of people are getting a little hesitant to cut in, and some of the first-time buyers are a little bit more nervous. Do you have any suggestions for first-time buyers that are trying to come in right now?
The biggest thing is having that conversation about income. If they feel confident about their job and where they're at with their employment, then I tell them basically you have nothing to worry about. It's just like going forward with any other mortgage, no matter what time we're in. First-time home buyer, like I had mentioned, still has stayed the same. So the rates are still good. The underwriting requirements for MFA are still the same. So, it's easier to get into those loans. So it makes it a lot more easier to calm the client because the process is easier.
Just real quick, what are MFA loans, just in case people out there might not know what those are, or FHA?
Awesome. So MFA is the Mortgage Finance Authority. They're a bond program here in New Mexico. And they have an assistant program that can lend you up to $8,000 up front towards your down payment and closing costs. So the average purchase right now for first-time home buyer is between $150,000 to $200,000, and the $8,000 covers the majority of it. One of their main requirements is that you at least have a minimum 620 credit score and that you bring $500 of your own money to the table. And that's usually the earnest money that's, asked from the realtor. So just use the earnest money as the $500 towards the MFA requirement.
Okay.
Yeah. So only certain people qualify for it because there are income limits, there are purchase price limits, but we just, do that application process and see if they fit in that box.
Okay. That's a good option for a lot of people. And so How about, do you guys do USDA loans at all with
We,
Waterstone? You do?
we mm-hmm.
Okay, because Los Alamos is actually in the Jemez where I work, and Espanola and whatnot are considered rural areas, and so a lot of people don't realize that USDA loans are 0% down.
That is
So,
correct. Mm-hmm.
yeah, that's actually helpful because a lot of times people think that they have to come in with $20,000 to buy a home. They don't realize that there's programs out there, the MFA program, the USDA 0%, and the first-time home buyers, which typically, what are the first-time home buyer programs, like the downs that they need if they don't do the zero USDA or the MFA?
If they do a traditional program like an FHA or a conventional loan program, the FHA is a minimum of 3.5%. That's required. You can put more, but the minimum is 3.5%. Conventional, the minimum is a 5%. And you can put more. It's suggested to put more down on a conventional because the more you put, the more you pay off the loan, obviously. But the goal is to eventually pay down 20% of the loan so that you can remove the private mortgage insurance. So
yeah.
Conventional and VA are the only loan programs that will allow you to remove the PMI.
Oh, see, that's good to know. So just conventional and VA, you can remove the PMI. If you want to remove it with an FHA or USDA, you actually have to refinance. Is that correct? To remove the PMI? Okay. Mm-hmm. And so private mortgage insurance PMI is on if you put down less than 20% when you purchase the home.
That's right? Correct.
Okay, because some buyers are kind of like, what does that mean?
Well, there is a misconception, especially if you are a first-time home buyer. I hear this a lot. People think they have to put 20% down on a home when they're purchasing. But that hasn't happened in a long time. That's not a requirement unless you're doing a jumbo. Jumbo is going to require around 25% or so.
Okay. And real quick, how long are you guys looking at closings? Like, how long are closings taking these days for you all?
I am closing on time. So usually with an MFA, 45 days. But, I've closed every loan early, even during this pandemic. It really matters who you work with. You want to pick a strong lender with a team, with the strong back-end process, so that you can get your loans closed and have the option to possibly close them early. The average across the board, with most lenders, we say 30 to 45 days. If we can get it closed sooner, we will.
Have you seen any close under 30 days, like during this time right now?
No. Unless there's something.
No.
Usually, the reason for any delayed closing had to do something with the property. But
okay.
Yeah.
Because we know that a lot of people are refinancing right now, so appraisals are kind of thin. So have you had any issues getting appraisals out?
I have not. I have not had any issues at all.
Good. That's good to know. Well, thank you, Jynel. Is there anything else that you want our buyers to know, or you want to share with me, or ask me questions on real estate? I don't know.
Well, the topic recently is forbearance. That has been huge. Being offered left and right. I actually worked with a client who's also a real estate agent who wanted to refinance their home. And we had been talking about this process for a while. There's a lot of buzz in the media that the rates are going to go down, and they probably will. So a lot of my refinances at this point have taken the decision to kind of hold off until those rates go down. And the reason why the rates are possibly going to go down is because we're going to need to re-stimulate the economy when we get back up and running again, when we can go back to work. Government's going to want people to buy homes again. So basically, we predict that the rates are probably going to go down even more. So a lot of my refis are kind of playing it smart and holding off. But those are usually the people that don't really need to refi. They just really want a prettier interest rate. People who need to refi right now, it is a good time because, again, you'll lower your interest rate. You can skip a payment when you refi. So that's going to help you a lot. You can use the equity from the home, as cash. If you need to pull out that equity and you're in hard times, that's yours to use if you have it. So with that being said, I was talking to this lady today about her refinance. And so she's getting all her paperwork done. And she went to go talk to her mortgage company. And the mortgage company that she was using told her payment was due. So she went to go put her payment down, right? She pays over the phone or at the bank always. She pays on time, but there was a restriction on her account and she didn't know why. So she did more digging. Well, they automatically put a forbearance on her account. And she says she did not ask for it. And so she got up in arms because she's in real estate. And she's like, I don't know what happened. I didn't ask for a forbearance. Like, I don't know why that's there. It is kind of scary because right now, it's a hot topic in the media. I don't know if companies are taking the opportunity to put you in forbearance status for you to contact them to either allow the forbearance to go through or not, but to just kind of put it there in a holding space, which is kind of scary for most people. They don't want to hear that word. It's right. A bad word, but basically all forbearance is delaying payment. The government is allowing people to call up their mortgage companies and ask for forbearance. Most of the time, you don't even have to give a reason. You can say you lost your job, but they're not asking for a lot to issue these forbearances. So they're just happening real quick. And the thing is that if you can't make your payment now and you let 6 months go by, you're still going to have to pay 6 months worth of mortgage payments at the end. And at the end, are you really going to have the full 6 months to pay? If you pay you got laid off. Yeah. So, worst case scenario, last case scenario, maybe do the forbearance, but I wouldn't recommend it because it is having some negative impact for clients in the future. So basically, it may be harder for you to purchase a new home and refinance. So basically, if you have a forbearance on your credit report, you wouldn't be able to do either of them. It's kind of like, bankruptcy, you have to wait a certain amount of time. Same with the forbearance.
Okay. Yeah. I just want to say hi to Miss Pammy, and she chimed in and commented and said, good job. And also Miss Brittany decided she's in there watching us and she said hi. So hi, Britt. So yeah, one thing that we've noticed, like in Los Alamos, I thought buyers would be afraid because of the COVID. Granted, I've had a few buyers that have decided not to, but we're still pretty strong in Los Alamos. I recently put in an offer and there were 14 different offers. And so things are not slowing down. And you would think that it was, but they're not.
Yeah.
Which is good too.
Good. That's awesome.
Yeah, Los Alamos is doing good. So, but thank you. Was there anything else that you wanted to touch on and let people know?
I think that's it. I'm always available for questions. So if you ever, want to text, email me, call me, Instagram.
Yeah, go ahead and link. I'm going to go ahead and we'll comment your contact information. So if anybody wants to get a hold of you, we'll put her information down there. And if you guys still have questions later on, if you're watching this later, let us know, either real estate or mortgage wise, and we'll get back to you. Thank you so much, Jynel, for doing this so last minute and joining me tonight. And hope you're staying safe. And hopefully all your clients are doing good. And you guys are doing good out there in Facebook land. And
we're doing good.
Good. Well, we're going to say good night for now. If I want to tell everybody good night, you guys have a good one. Thanks so much.
Good night, guys. Thank you.
Oh, look at Exit Realty says thank you. Thank you. Have a good one.
Bye-bye.
Bye-bye.